Yesterday was an absolutely critical day in the markets. I will tell you why. I am Dr. Stock, Doctor of Education. And do you know what kind of baked good you can use for a seat? Really, anything cherry. I don't feel good about that joke at all. Seat, chair, cherry, you know. Well, what's better than those dad jokes are the technicals, and what's better than the technicals is the results that can come from them. And let me share some of those results with you from my short hedge positions for a day such as yesterday, which is even better than I could have hoped for. So check this out. I share these buys and sells over at my Discord. So the receipts over there ready to go. So NVDA, which moves 2x the inverse of NVIDIA, 60% profit on that one. That was awfully nice. Look at this SQQQ call, which again this is triple leverage inverse to what we see in the Qs, almost 3x. Now, mind you, yeah, we're a little bit shy of that 200% mark. It should be 3x what I paid for it. However, I can make up for it later on here. I'll show you that. So SQQQ call, a longer term one that I had, 65% profit. That one had a December expiration on that one. TSLA puts, so this is one that moves 2x what Tesla does. So Tesla moved 2x down. So holy cow, 5x profit, 463% up. Now, mind you, that's 5x and then another half a time after that. That was absolutely massive to see that come through. And then a Bitcoin shorted that one on Friday, over 3x coming back to me on that one. So from the amount that I paid for it, 3xing from there, and then about a little over 64% above that yet. So SPXU, this one, man, oh man, I botched that one. I'm playing that one wrong, but that one also hit profitable for me, 13% loss. That ended up only being a few dollars compared to everything else that was here. Yesterday was a wildly green day for me yesterday, even though the market itself was down overall. And then JP Morgan coming in. Let me see. You actually can't see this one. Let me shrink that up there for you. There you go. JP Morgan. This was a put that I had on JP Morgan. 15% profit on that one. So let me bring this back over so we can get to the technicals, because yesterday was a traveling day for me. I took the family to Hershey Park, had a wonderful time over there. And so as far as the bounce goes, we actually had some really important things happen on the charts. So let me put those up there for you so that you can see them. So check this out. So looking at this on the way back up, this is SPY that we're looking at here, tracking the S&P 500. We actually came down and broke down below a 3 standard deviation Bollinger Band, which you should know that 3 standard deviations. So of all the price action that has happened or can happen during that time, there's only about 0.3% that can happen outside of this dark blue line down here and the one that's up there. So about 0.3 divided by 2 is 0.15%. Of the time is where you're going to find those prices below that. So this is a very rare occurrence to have that price action all the way down here. So I've adjusted what we have for the Fibonacci retracements to see where we could bounce to from here. We actually came back up following that tracement top to bottom. So peak down to trough, came back up and caught the 23.6 at 523. I think that's a good initial price target here. We could actually have a decent bounce from there, have volume confirmation, and we are nearly oversold, which on an index level, to be nearly oversold during a bull run like this one, last time we were there was back in April, and look at the run that we took from the April time. Now, mind you, do we go from here and set on new all-time highs? I don't know that we have that conditions here to do that. I don't know that we put in that higher high. I do think that we are sold off enough that was a bit of a flash crash for us, if you will, or a flash correction. And from here, we can actually bounce back up a little bit and maybe take over some of that. So you can see the price targets that I have on here, 523, 531, 537. That all puts us down below the 50-day moving averages still. So in the near term, still a little bit bearish on that stuff, but we are up above the 200-day, which is bullish overall, so you can get these quick drawdowns with some recovery to follow. So those are the reasons that I think that we could have a decent bounce off of these levels here, that we're not necessarily heading straight down from here. So watch for that bounce, watch where that next peak comes in, and then wherever we find that next peak, is it a higher high, is it a lower high? Then we got to find out about that next low. This told us where that ultimate low is in the near term. So that was excellent for establishing that. So when we go over to the Qs, what did it tell us about ultimate low? Well, actually pierced down through the 200-day, and we got to bounce back up above that 200-day. So we came down below it, bounced, closed above it. So still in bullish territory. We are down below the 50 that's on here. If I put the EMAs up here, the 50 EMA is also down there as well. Price targets. that I have for this one, by the way, 442, 454, and 464. I think that we could still bounce significantly upward from here. That price target too, I think, is a very reasonable price target. And if we really catch some momentum back on the upside of this 464, and between now and I would say NVIDIA's earnings could be where we see that taking place. And I do have NVIDIA technicals for you in this video as well. And then when we look at what we have for IWM, so the Russell 2000 stocks, hard bounce off of the 200-day simple moving average that we have on here. So I apologize for the mess. I do like to put these out for my own tracking purposes. We do have a gap to fill from 205 to 207, and right now in the pre-market, we're at 203. So I think that we could easily get that fill up to the 50-day on here, up to that 208, or at the very least fill that gap to 207 on this one, which that gap is on either side here. We haven't found ourselves during regular trading hours in that territory since going back over here, back to the middle of June. So on the way up, we skipped it. On the way down, we skipped it. I think that we could push back up and we could fill that. So be on the lookout to see us fill that gap. The 50-day resistance is right up in there, by the way, at about 208. That's why I had that price target sitting down below the Fibonacci retracement. And then the 50% level from peak down to trough, 213 could be that retracement level. So that's what we need to watch out for IWM if we're able to bounce, if we're able to recover some bullishness in the markets right now. Each of those indices all up above the 200-day, by the way. So those bounces are easier to come by than those drops. So we'll be on the lookout for that. I don't know that we have a further just straight up rip down from that. That was a very temporary peak fear kind of day. So what does Bitcoin look like? For Bitcoin, you can see that we have this broadening pattern here. I think we're going to take a significant bounce. We could return into about the 50% Fibonacci retracement level from peak to trough at about 60,000-ish, but then up here at the 61.8 level is where we have the 50-day EMA, SMA, and the 200-day is also right in there. We could possibly get that death cross. We'll see. I think that price action that caused that to happen, to make that formation happen, a lot of that's there already. I think we could take a significant bounce from here. And if we do take that bounce, we got to look for that rejection to happen. Could be around that $60,000 level. Be on the lookout for that. I think it's highly critical. And I got to say, for Bitcoin, there's an argument going on right now, risk asset versus flight to safety versus hedge against world currencies. And I got to say, I think all three of them are true. I think that it is a risk asset by a lot of people's standards. I think that it's also a flight to safety for especially the Bitcoin maximalists that are out there, and also that hedge against world currencies as well. So the fact that it held up as well as it did while the market was selling off as much as it did, I think that shows some of the signs that it is a risk asset. But I think the fact that it did hold up like it did also shows us that there's a lot of buying pressure, a lot of support that's still there for Bitcoin that is not ready just to roll over and die for a while just because the market's selling off. So yeah, it sold off with the markets. Yeah, it was a horrible day for Bitcoin, just as it was, at least from the bottom of the markets. That recovery was pretty darn nice, and I wish I was able to trade, because seeing some of those technicals play out, like bouncing off the 200-day for IWM or QQQ, would have been massive for trading in the opposite direction. So moving on from there into Tesla. For Tesla, we're down below the 200-day, so we got to watch what happens. We need to be able to overtake that. If we're not able to overtake that, we could get the EMAs coming down and crossing this way over other moving averages and start to push us down further. So for Tesla, pre-market back up over $200 per share. It closed yesterday under 200. If we're able to close up above the 200-day, we could have a little bit more fuel in the fire here for Tesla. And then we have this trend line resistance coming down here as well that we want to watch out for. If we move to that upside, we do get limited by this resistance that we saw from the most recent sell-off. We do have some pretty significant support coming in. This one goes all the way back to a touch back in the beginning of January. And you can see while we were consolidating and accumulating, we were finding that line as support, came down, touched it yesterday. So that's very much confirmed support for us for Tesla. So for the downside of this, yesterday was important because it shows us where at least a near-term bottom is. As I said for the indices, as I said for Tesla, and here comes NVIDIA. NVIDIA, I think, has a strong bounce in the cards for it. We'll see what it puts out for us. 103-ish right now. Price targets 110, 116, and 122. That would put us up at that 50-day moving average. I do think that there is some upside between now and earnings, even if it doesn't take us back to all-time highs because the market sold off. If the market recovers strongly, should also help NVIDIA also to recover strongly. That's jumping up in an upward moving elevator. Opposite of what I said yesterday, when the markets were moving down, jumping up in a downward moving elevator makes it more difficult to do. So we'll see. I think that we could easily get back to that 116 to 122. We're going to contend with that 50-day probably pretty hard, whether it's the simple moving average in blue that's on here for you, or if it's the EMA, which is down here in that red color that we have right at about 115. There is significant resistance to be found from that 115 to 118 level. And as I said back here, when we got this big sell-off, that if we were able to hold it, we could push up above it. We were not able to hold it. We broke down below it, and we saw yesterday was pretty gross. We did have strong volume yesterday, so that's worthwhile to point out. To have that volume confirmation in that buy off of about $90 per share. I was able to get some shares at about 99, so it was nice to actually get access to some two-figure stock. That gap to be filled from 95 to 102. Look here. Gap filled. We filled that gap, so that was really nice to see that come in. When we opened, we were down below that gap, still had to fill. So the market recovered. We were able to fill that gap. No longer resides there for us. And now we're back up above support at about 102. We'll see how the market does today. I think that we could bounce. TMF had a really exciting day yesterday. A lot of people buying into that fear type trade and then moving over into the risk off assets. And there's probably going to be some dropping to it. It's probably going to give back a little. But I do think that we still have some upside to go for TMF. Once we find out where that support is, that support, maybe we pull back to down here about 57. Maybe we pull back to about 55. At the very worst of it, in the near term, I think we pull back to about 53. So that would take us down to the 61.8. And I think that would set up an incredible buying opportunity for that bounce, that ride back up. We are up above the 200-day and the 50-day moving averages on this one. All right, so guys, let me know what you think down in the comments. Check out the Patreon, see my buys and sells by using that link down in the description. I post them over at the Discord available through that Patreon. And then also, if you learn to do technical analysis like I do and really up your trading game, take it to the next level, there is a course for that down in the description as well. Click that, sign up using the code word DOCTOR for massive savings. It's an absolutely incredible discount that's available right now, DOCTOR. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.